Good evening, everyone. Welcome to the weekly webinar. This is Wayne, Head of Research and Education. On behalf of Fullerton Markets, I warmly welcome everyone. So as usual, the webinar will be divided into three segments. The first segment will look at the key events that has happened in the past 1 week. Then we'll move on to this week's calendar to look at the key events to look out for. And finally, we'll move on to the charts to look for trading opportunities. Let's jump straight to it. The key events for last week, the first one is basically RBNZ, New Zealand interest rate announcement. Of course, as expected, they kept their interest rate at 1.75%. And the picture extracted from Bloomberg, that's Wheeler, the governor of Reserve Bank of New Zealand. So the key message that he bring about is basically they are looking at keeping their benchmark rate low and continue to be accommodative, meaning to say they are not looking into any rate hike in the near future. So the main reason, of course, is the uncertainties that they foresee that may impact their economy. So they prefer to remain accommodative, meaning to keep the interest rate low. Of course, the other event that we know of is a political event, but we know that political event has certain impact on the financial market as well, especially true for this case in the case of US. So Donald Trump health bill suffered a defeat, a setback. So he wanted to sort of remove Obamacare, but it was met with objection, so the bill did not went through. But some of the people will be asking, what has healthcare got to do with the financial market? Basically, the market and investors, they are not looking at healthcare, of course, but what they are looking out for if Trump's healthcare bill has faced with objection, what they are foreseeing is his future proposal for tax cuts and spending increase may meet with the same resistance as well. So that is the concern of investors, the future plans, because we know that a lot of optimism has been priced in because of Trump's promise for tax cuts and spending increase. But if such proposal are to met with resistance and it doesn't get passed through, then of course whatever being priced in will start to price out, as we have seen how the US equities has fallen last week. Of course, we can go on to the charts towards the end of the webinar to look at how US equities or the dollar perform. But in summary, this is what happens to US, and it is not painting a good picture for the US dollar and also the US equities. And of course, for this week, the key event is basically Brexit. As planned, UK Prime Minister Theresa May is expected to invoke Article 50 on 29 March, which is Wednesday. So of course, what happens when she invoked Article 50? For the details, you can read our weekly research, which is published a few hours ago on our website and on our Facebook as well. So what we expect is at the point of Theresa May, invoking Article 50, there may be a sell-off in the sterling, but we expect the sell-off to be short-lived. Reason is because for the entire process of Brexit to complete, it will take roughly 2 years, and only then we can assess the impact to UK's economy. So for the 2 years, we may not see how Brexit will impact UK economy. So market most likely will delay the reaction to a later date, and they will choose to focus back to what is closer to them, which is the UK inflation. Last week we see the CPI outperformed what the market expected. Market is expecting 2.1%, but the actual CPI came in 2.3%. So as you can see, the chart that is highlighting the blue and the white line. The white line is the core inflation, the blue is the headline inflation. So you notice there's a red line there too. 2 is the target, is the Bank of England's inflation target. So you will notice that the headline inflation has overshot their target, and the core inflation actually has already hit their target. And judging from the trend, the inflation is on an uptrend, so market would choose to focus back onto the inflation, and they would be expecting Bank of England to be more hawkish in the future, or maybe talking about rate hike. So we know that in the last BOE meeting, one of the MPC member actually voted for a rate hike. So that's why we expect the sell-off in the sterling to be short-lived. Main reason is after they sell, most likely whatever comes to their mind would be, oh, Brexit is 2 years later, the actual Brexit. And what is more immediate is basically their inflation concern. So that's so much for last week, and this week the calendar is pretty thin on data, so that there are not much data to watch out for in our view. The key thing to take note of is basically on Wednesday, 29th March is the day where UK will trigger Article 50. So meaning to say, on Wednesday, be aware if you are holding any sterling position. So market could be pretty volatile, and do manage your risk if you decide to short or long sterling for whatever reason. Okay. So before we move on to the charts, very quickly, this is the accelerator in case some of you have not heard of the promotion, the most popular promotion that Fullerton Markets offered to our clients. A lot of our clients actually took up this promotion. Do check us out. It is at fullertonmarkets.com/promotions. Of course, very quickly, the other upcoming event on the end of April, 29th and 30th April. This event is the Leaders Summit to be held in Bangkok. So this is in conjunction to celebrate the first anniversary for Fullerton Market next month. Do check out this event. It is at offers.fullertonmarkets.com/en/FLS. So seats are limited. Please lock in your seat as soon as possible. So we move on to the last segment, which is we'll go on to the charts. So for this segment, feel free to type in the currency pairs and the time frame, or the instruments that you want me to look at, and the time frame as well. So while you are typing in the requests, I will do a quick review on the charts that we have looked at last week. The first chart that we looked at last week is the dollar CAD M15. So this is the chart we look at. The vertical line is the time of the webinar. So I mentioned that when the price closed into the green box, that is a suggestion where to go short. And the stop loss is somewhere here, the red box above. And the blue box are the places where you can consider shifting your stop loss to your entry price or taking partial profit. So we know that there's the dollar weakened pretty much towards the middle of last week. So as you can see over here, if you have placed a stop loss in the red box, the prices has gone down to beyond the 2 blue boxes or even lower. So this is because this is a low time frame 15-minute chart, the entire move is about 50 pips all the way down. It broke the support, it went down about 80 pips. So regardless whether you are taking partial profit or trailing stop, you can grab 50 pips out of this trade. That would be pretty awesome as well. The next chart that we have looked at is basically Ozzy Kiwi. So for Ozzy Kiwi, I have so-called highlighted a few trading opportunities. The first one is the one on top. If there's a break above, possible to go long. So this did not happen. The next one is when the price retraced to somewhere 1.09 and if it bounce up. So it has price action has to show that it has a candle going near to 1.09 and another bull candle to push the price up and close at the green box. That is the kind of price action I want to see before considering to go long. That did not happen as well. As you can see, the bear candle keeps going down and down and down. And of course, the other suggestion is if the candle goes to 1.0860 and if it bounces up. So of course, this case you can see the shadow actually touching. So there is no bullish candlestick formation for a long trade. So price actually hover in the middle over here and then it broke. So the other suggestion is actually when price broke 1.0860, close into the green box or lower, that would be a sell signal. So this case, this bear candle over here where I will change it to a red arrow. Where the red arrow is pointing to, that is the bear candle that broke 1.0860 and fulfill the criteria for a short since the closing price is into the green box or lower already. So that will be a short, and if you have followed this suggestion, you should still be seeing some floating profit at the moment. The third chart that we have looked at is actually Pound Aussie. The suggestion was to look out for a short if the price close below 1.59 into 1.58 thereabout, plus minus the price. If candle close into the green box, that will be our signal to short. So price did not close below. So because of the outperforming CPI, that's why we see the sterling strengthening across the other currencies as well. The fourth chart that we have looked at is basically gold. So as you can see, gold over here, the suggestion is to go short if the price close below 1231 into the green box over here. So the bear candle over here actually fulfills the criteria to go short, and the blue box here is basically the first target. So as you can see, the next bear candle actually came in quite close to the blue box, but didn't quite make the mark. Okay, let me check the price. The low is 1226. 1226 is basically here. As you can see, where the black horizontal line is just at the border of the blue box. Didn't quite really get into the blue box for my first target. So it doesn't fulfill my criteria to even shift my stop loss to break even. So of course, the price hovered there for about 5-6 hours before decided to head upwards. For reason, we know that last week dollar has been weakening. So when dollar weakens, chances is gold will head upwards. So for this trade, my trade, it would have hit my stop loss, regardless whether I put a tight stop loss over here or a conservative stop loss over there. And next is Nasdaq. We have looked at Nasdaq last week. So the vertical line is the time of webinar. So I mentioned that because this is a 4-hour chart, so during the webinar, the candle is still moving. So I mentioned that if the candle close above 5405 into the green box or higher, that would be a buy signal for me. And the blue box over here is the first target where we consider to take partial profit and shift our stop loss to our entry price to protect our position. So for this trade, we would have entered at the bear candle over here after the candle where the vertical line is closes, which is slightly above the green box, which fulfills our criteria for entry to go long. And then in the next 4 to 5 candles, price has shot up into the blue box over here, piercing right above. So it would have fulfilled our criteria for the first target to at least take a partial profit and shift the stop loss to entry price, and to protect against this strong fall thereafter. So this is would have exit with break even for the rest of the position. And finally, the last chart that we have looked at is the dollar yen. So the two suggestions over here is look for reversal pattern around 112 to go long. So I mentioned that one of the possible reversal pattern is like a double bottom around the 112. Possibly if that happens, we could consider going long. Another suggestion is look for bullish candlestick formation around 112 to go long. So we know that as you can see over here, none of the above has happened. Price just pierced right through. There's no bullish reversal candlestick formation chart pattern, no bullish candlestick formation, no bullish chart pattern at all, and it just pierced right through all the way, and price now is close to 110. So that were the 6 charts that we have looked at last week. So before I move on to the request, there's a question: why is the US dollar weakening after the Fed increased the rate? Okay, I've answered this question during last webinar, but I'll just answer it again. The main reason is because of market expectation. At the point of them increasing interest rate, it is already expected. So meaning the market is already priced in a rate hike, and it is not pricing in a 50% rate hike or 60% rate hike. Just prior to the Fed increasing interest rate, the market is already pricing in almost 100% rate hike. That means they are almost sure that the Fed is going to increase interest rate already. So at the point of increasing interest rate, it is just meeting the expectation of the market. Then we move on to the next thing that the market is looking out for. The market is actually looking out for the Fed to give some clear indication as to when the next rate hike will be. So of course, during Fed statement and the press conference, Janet Yellen did not really satisfy the market in that aspect. So there wasn't any clear indication when the second rate hike would be. So she just mentioned that 3 rate hike for this year is still on target, is still their plan. So market is not satisfied with her so-called answer. So that's why there is a sell-off in the dollar, and market is pricing out a rate hike in June. So prior to the FOMC, market priced in about 60% chance of the second rate hike in June. But after the meeting, actually market priced out to less than 50%. So the chances of the rate hike at the moment in June is about 40+%. So that's what happens to the market. Of course, that was 2 weeks ago. And last week, the main reason is the main reason is Donald Trump policy met with so-called setback. So market is further pricing out US dollar strength because they are expecting Donald Trump's tax cuts plan and spending plan to meet with similar resistance from the Congress as well. Because prior to that, the market is very hopeful for tax cuts and spending to boost their economy. So if the reverse happens, then of course we see the dollar weakening. So that's the main reason why we see US dollar weaken after Fed, even though Fed increased interest rate. Okay, the first request for this week is basically pound dollar H4. So let me quickly just open up the pound dollar chart H4 time frame. Okay, so this is what we are seeing here on the screen is a pound dollar H4 chart. So what we are seeing here is up, up and away. So very strong push upwards. It seems like market is not bothered about Theresa May invoking Article 50 this week. So the uptrend is pretty strong. So as I've mentioned earlier on, if let's say if Theresa May invoke Article 50 as expected on Wednesday, we expect maybe the market to have an initial sell-off. The sterling dollar maybe will start to drop, but after a while it should bounce back up because there's still immediate inflation concern and possibility of rate hike, and that definitely will happen before UK exit UU in early 2019, which is about 2 years later. So the pound dollar definitely is in based on how the price action is moving now, is pretty strong uptrend. So one of the possible trade that I would look out for is this one. I don't like to chase after the price when the price is moving up, especially after two strong so-called bull candle. As you can see, it broke way up. I personally would prefer to see a pullback before taking a trade to go long. So the area that I'm watching out for is for the price to retrace back to 1.25 1.2530 thereabouts. Okay, round number would be good, easier. Okay, 1.2530 plus minus. So when price retrace to that area and then bounce up means I'm looking out for a bullish candlestick formation, and typically I will look out for a bullish engulfing. Okay. Not just not just a bull candle and I'll go in, but I prefer to see a bullish engulfing, which means the bull candle is actually bigger than the previous bear candle. That's the candlestick formation. In case some of you are wondering what am I talking about, just to give you an example, over here where my red box is indicating, this is a bullish candlestick formation. The name is called bullish engulfing. As you can see, the bull candle over here is longer, the body is bigger than the bear candle. That's why it's like engulfing the bear candle. So this is a bullish candlestick formation called the bullish engulfing. Of course, the opposite would be called the bearish engulfing. So since we are on this topic, let me just find a bearish engulfing pattern example for you to see. Okay, one example could be this. Okay, as you can see over here, these two candles, the red box on the left, the bull candle has a shorter body and the bear candle has a bigger body. These two candles combination is what we call a bearish engulfing pattern. Okay, so I'm going to put a text over here. Possible entry after formation of bullish engulfing pattern. Okay, this is my comments. So for pound dollar, this would be the, of course, where would the formation be formed? I have no idea. It could be somewhere in the green box would be the entry to go long, or it could be higher. There's no way to tell where would be the price, but we just need to watch out and wait for it to happen if it does happen. But if it doesn't happen, then there's no trade for me. So this is what I'm waiting for to happen to give me a trading opportunity. So that's a pound dollar. The next request would be dollar yen H4. Okay, let me open up the dollar yen H4. Okay, this is a dollar yen H4 chart. It is almost the opposite of a pound dollar. So dollar yen is down, down and away. So very strong downtrend, as you can see over here. So just by looking at the pound dollar and the dollar yen, it is we can almost conclude that the dollar is pretty weak in the last so-called few weeks. So this is a very strong downtrend over here for dollar yen. And more importantly, if I go to higher time frame to show you, this is the higher time frame. Okay, so at least give you some perspective. So I'm going to mark some key levels, so you know where I'm referring to. All the red line, I will mark the so-called key round numbers, like 112. The first one is actually 112. The second one is 111. And I'll mark the next one, which is 110, which is where the price is heading now. And of course, there's one more, 109. Okay, these are all round numbers. Okay, I'm going to make the lines thinner because it appears that they are too thick. Okay. So the round numbers are where I'm seeing possible support for dollar yen for now. So as you can see, market is heading towards 110, and if it breach 110, then the next level most likely will head towards is 109. And if there's a breach of 109, then possibly it could go right towards the 107. Okay, so this is the round numbers level for your reference, and just based on this chart, you would have seen that the market has already broke the 112 key support. So 112 has been supporting it for quite some time, but now the market has broke, and a pause at 111 over here. Okay, I'm zooming in so that you are okay. There's a short pause over here at 111, and now the market broke again and hit towards 110. And possibly there could be a 1 or 2 days pause in 110 again before it breach to 109 if it so decide. Okay, so this is the daily time frame. At least you have a perspective of the high time frame where the market is heading. So now we will go back to the H4 time frame. Okay, so what we are seeing now is a H4 time frame. So price is slowly heading towards 110. The entry that I personally would be watching out for would be something like this, similar to the pound dollar but in the exact opposite fashion. So if the price retraces back to 111, and then there's a bearish engulfing candlestick formation, then possibly I could decide to go short. Okay. Excuse me. So look for bearish engulfing pattern around 111. Okay, so that is my comment for dollar yen. Some of you may have a question, when do I expect dollar yen to recover back to maybe 112, 113 or even higher? There is two possible catalysts that could propel maybe dollar yen back up towards 112, 113. The first one is renewed hopes that Donald Trump tax cut and spending increase plans will pass through the Congress. That's number one. Then of course number two is from now until June, maybe there's an increase in possibility of Fed increasing their interest rate in June. So currently the probability stands at about 40+%. So if there's reason for the market to believe that the chances of a June rate hike is going above 50%, 60% or even 70%, then in that kind of scenario, we could possibly see dollar yen heading upwards again. But other than these two reasons, at this moment, I don't foresee any other possibility of dollar yen heading upwards. Okay, so that's dollar yen. Okay, there's a question before I move on to the next chart, which is Euro Yen H1. When are engulfing candlesticks reliable in lower time frames, say M5 or M15? That is a tough question to answer, because if you ask me, is it reliable? So meaning to say, are you looking out for a high probability of it being reliable? So what's your definition of reliable? That's number one. To me, anything that works 60% of the time is considered reliable. That's number one. Number two, candlestick pattern is a tool. So of course, it is not the only criteria that I base my trades on. It doesn't mean that whenever there's a bullish engulfing pattern, I'll go long. Whenever there's a bearish engulfing pattern, I'll go short. It is not the only criteria for me to decide my trade. So I will look at the predominant trend of the market first to decide my direction. Then I will use the candlestick pattern as entry criteria. So of course, I'm still using it today. Is telling you that it is reliable for me. It works for me. So for low time frame, I don't really trade low time frame. That's number one as well. So I prefer to trade the H1 time frame or higher. But if you are starting to want to use it for lower time frame, my best so-called suggestion for you is always do some back testing on your own to see, based on your trading methodology, if you incorporate this engulfing patterns into your trading methodologies to look for entry, does it work well for you? The next question, how many stop loss pips do I set for dollar yen H4, which I mentioned earlier on? Okay, for me, I don't really set a fixed stop loss based on the currency pair or the time frame. Meaning to say, it doesn't mean for dollar yen H4 chart, all my stop loss is 50 pips or all my stop loss is 60 pips. I don't do that. I usually look at the chart to tell me where is the correct place to put my stop loss. When I say correct place, means correct based on my definition. To explain further, let's say for example, I'll take this dollar yen so-called trade as an example. The reason for this trade is I'm expecting the downward trend to continue. So that's why I have a criteria to go short. So if I go short around where the green box is, where the price is, then I'll place a stop loss at a place where I think I'm wrong in my trade. So let me repeat, the way I decide my stop loss is at a place where I think I'm wrong in my trade. So it is not determined by number of pips. So it doesn't mean that dollar yen H4, I'm always using 60 pips. I'm always using 80 pips. It could be sometimes 30 pips. It could be sometimes 80 pips. So where in this trade is the place where I start to suspect I'm wrong. So this is downtrend. That means if the price can reach certain level and I start to suspect maybe dollar yen will reverse for an uptrend, that is the price that I will place my stop loss. So in this case, if you see the level over here, after my entry, the next immediate resistance is somewhere around this area. Okay, which is around 111.50. So that is the immediate resistance. Meaning to say, it is possible for the price to head towards 11150 and go downwards. That's what the resistance is talking about. So if the price can close beyond or hit higher than 111.50, that is the place where I would suspect that maybe price was starting to turn upwards. I may be wrong in my trade already. There is where I will cut my trade. So in this example, if I measure, this is about 102 pips stop loss. So this is how I determine the place where I put my stop loss. Hope that answers your question. I don't really use a fixed pips, regardless of the currency pair and the time frame. Okay, let me move on to the next request, which is Euro Yen H1. Okay, so this is Euro Yen H1 chart. Okay, he has been creeping downwards, and in the last maybe 1 week or so, market goes into a consolidation over here. So I'm going to mark the area of consolidation for our reference. Okay, this is the time of the webinar. Okay, let me put the vertical line for reference. Okay, I think I put a round number, that would be good. 119.50. Okay, so this is the area of consolidation for me for Euro Yen H1. So I'm going to zoom in for better visibility. Okay, so it looks clearer on your screen. So this is Euro Yen. Okay, based on the short-term momentum, price is slowly creeping upwards. So there's a few suggestions for you to consider. The first one is when the price close above to the green box. And how do I decide this green box? If I track back to the resistance region, which is around 120.25, take note of this shadow as well. Shadow sometimes will tell you the limit to where the price will go to, example. So as you can see, the limit is around 120.33. So I place my box slightly above, just above the limit, as you can see over here. So as long as the price close into the green box, or higher, that would be my signal to go long. Okay, I use green color to denote the entry criteria. So the first one is if the price just goes straight, close above. Okay, close above where the green box is or higher, then that is my entry signal to go long. So of course, the other suggestion is if the price hovers around 120.25 and start to turn down. When I say turn down, it has to happen in a few candlesticks. So it doesn't mean the same candlestick when the price go up and then come down, you enter to go short. Doesn't mean that. It has to be a candle that goes up and the next few candles that comes down to qualify for this for my entry. So the easiest way again, it is to look for a bearish engulfing for a short trade over here. So I'll put the criteria there. And some of you may ask, why do I use bearish engulfing? For one simple reason, it is easy to identify. One short body bull candle and one longer body bear candle, that is the engulfing pattern. So of course you can, for those of you trading candlestick patterns, if you trade other candlestick patterns, then you may want to explore same methodology, but for the entry criteria, you use other bearish candlestick pattern before you go short. Example, maybe 3 black crow, that means 3 black candles, or they have the hangman, inverted hammer, shooting star, whatever. Okay, there's too many of candlestick patterns around, so just leverage or use whatever you are comfortable with. So it just happened that bearish engulfing is what I'm comfortable with. So that will be the second suggestion, option for me to enter to go short. Then of course the other option would be if the price close below. Okay, as you can see, for the close below is slightly tricky, because if the tail is very long. As you can see, the longest tail over here is quite unusual. So if I choose to put it lower, you will notice that, wow, the candle has to close way below. It's way too much in my opinion. So in this example, I would rather refer to the other shadow. Okay, as you can see, there are 1, 2, 3, 4 other shadows which is slightly higher. So instead of being too careful, I prefer to opt for an earlier entry, which is over here. Okay, referencing this low. So the box is slightly below 119.42. If the candle close into the green box or lower, that would be my criteria to go short. And similarly, if the price finds support in 119.50, meaning that you see a shadow of the candle formed, and then the next candle could be a bullish engulfing, then that could be the signal for me to go long. Okay, for this case, it will be a bullish engulfing, the opposite. Okay, that will be my suggestion for Euro Yen. There are 4 possibilities. So depending on which criteria is fulfilled, then I will take the trade accordingly. Okay, that's Euro Yen. Let me look at the next request. Okay, the next request is basically Pound Yen daily chart. Okay, let's look at the Pound Yen daily chart. Okay, that's the pound yen daily chart. Okay, this is pound yen. As you can see over here, daily chart. Interesting formation. Okay, I'll mark it on this chart first, then I'll zoom in. I understand that some of you watching it on your monitor, the candlestick may be quite small. No worry, just look at the overall picture. What I'm drawing here is a ascending triangle, so-called chart pattern. So I'm going to put in the levels. Because it's a daily chart, you will notice 10 plus minus 10 pips doesn't mean a lot as well. Okay, let me so this is ascending triangle pattern. Let me just zoom in. Oops. Okay. So price is squeezing narrower and narrower. So two possibilities. Of course, don't try to trade within this small gap over here, even though it is like 160 pips. It may look a lot, but on a daily time frame, if you trigger a trade over here, your stop loss is easily 150 pips with potential of less than 100 pips. So personally, I would prefer to go with breakouts. As you can see, prices are narrowing, and it's most likely telling me waiting for a breakout. So the first criteria, if the candle close into the green box, okay, or lower, that would be my criteria to go short. And of course, the other option over here, if I may, I draw a very this is a micro resistance. Chances is it is based on a H4 time frame. So if I switch to H4 time frame, I may see this resistance more clearly. It is around 14040. Okay, just let me switch to H4 time frame and take a quick look. So as you can see over here, this is H4 time frame. There you are, 14040 is over here, the upper blue line. So you see it is quite nicely, quite resistance over there. So some of you may ask me, when you are looking at daily chart, how do you see the H4 time frame? Of course, my simple answer is if you trade long enough, you will start to see or imagine cross time frame charts. Of course, it may not be 100% accurate, but rough guess, if I look at the daily chart, I may know roughly how the H4 chart look like. Or if I look at H4 chart, I may know how the H1 chart or the M15 chart look like. So of course, all this comes with experience when you look at charts more and more. Anyway, back to this. So if the resistance at 140.40, then the other option would be if the price close above it. where the green box is. That would be my criteria to go long. Okay, I'll put the price label there so that you roughly know where is the price, which is around 141.25 plus minus. Okay, plus minus 5 to 10 pips. That will be the green box area. So if it close at 141.20 or above, that would be the entry. And for the one below would be 137.20 or below. Okay, if the candle close 137.20 or lower, that would be my entry criteria to go short. So this is pound yen daily chart for me. Okay, the next request is basically gold daily chart as well. So gold is up and away. Last looked at it, so H4 is up and away. Let's look at daily chart. Okay, this is how the daily chart looks like. And it is heading into the conversion region over here on the daily chart. Okay, around 1256 plus minus. So for gold, if you are trading the daily chart, it could be plus minus $1 to $2, meaning to say plus minus means it could be 1257, 1258 or 1255, 1254, that kind of range. So the region could be quite thick, a few dollars difference. And just in case some of you are wondering why I say a few dollars difference, because 1256 is $1,256 per ounce. So this is actually a dollar value. So a few dollar difference means is, let's say $3 higher is 1259, $3 lower is 1253. So price is in the decision region. So before I go, let me zoom in. Okay. So where the green box is, if the price close into the green box, then it is my criteria to go long, which is 1266. 1265, let's make it 1265 or higher. Okay, 1265 or higher, then it is my criteria to go long. Candle close at 1265 or higher. And for the other way around, in case the price goes up, but it is only the shadow that head upwards but did not close into 1265, and subsequent 2 or 3 candles starts to turn downwards, then the selling signal for me would be if the price close at 1241 or lower. Okay, If price close at 1241 or lower, that would be my signal to go short. Okay, that's go daily chart. And for daily chart, because it's 1 day 1 candle, so for the entire week past, that would be another 4 more candles. That's all. Okay, next request is Euro dollar H4. Okay, I'll look at Euro dollar H4. As you can see, out of the 1, 2, 3, we have 6 charts open now, out of which 4 are actually priced against the dollar. So meaning to say that there are 4 charts that we have looked at today that are correlated against the dollar. So if the dollar weakens, chances is pound dollar will head higher, dollar yen will head lower, gold will head higher, euro dollar will head higher. And of course, if the US dollar strengthens, likely to see pound dollar heading lower, dollar yen heading higher, gold heading lower, and euro dollar heading lower. So if you decide to take positions in all these 4 different currencies, pairs and symbols and commodities, then please manage your position, because it may be the case where you hit all 4 profits together. That's the best scenario. Or it could be a case where you hit 4 losses together. So that's euro dollar. Similarly, the chart movement is quite similar to pound dollar. Okay, pound dollar is over here. Price is heading upwards. As you can see, price has pierced right up. Euro dollar as well, heading higher, making a new high over here. So my methodology will be similar. Some of you may be asking me, when do you trade the weekend gap or whatever? My answer is I don't really trade weekend gaps. Okay, over here, as you can see, from the last Friday closing to today's opening, there is a gap. So this is what we call a weekend gap. So I don't really trade the weekend gap. So for this case, if you look at how the price action has happened, yes, price has breached above the 1.0815 region. Okay, this is a gap beyond the resistance. And interestingly, after the gap above, you see a price pause over here. Okay, where the little candle formation over there, very small body. So whenever candlestick is having a small body, it is telling us a price pause there. And this is a 4-hour candle, meaning the price has paused in that very tight range for 4 hours. So these are some things to watch out for, that I'll watch out for as well. That means that could possibly be my area to look out for entry, which is around 1.0845. So instead of price heading all the way to 1.0815, there could be a possibility that when the price head downwards, it will find support at 1.0845, around there. So of course, if it pierces right through, then I will wait for the next possible entry. So there's two possibility. If the price retrace to 1.0845 and start to bounce up, that could possibly be my signal to go long. Or if it head lower to 1.0815 and bounce up, that would be my second option to go long. So depends on which scenario happens first. Okay, so this is the euro dollar chart for me. I'll be looking out for these two potential long trades. Then of course, if you want to probe further, so when would you go short? So how many of you want to know the answer? When would I go short on the euro dollar? How many of you want to know the answer? If no response, then I'll just move on. Yes, that's the purpose of me asking question, to make sure that you are not falling asleep on me. Okay, where I would look for a trade to go short is if I have a reason to believe the trend possibly could change. And this would be the area that I would watch out for, which is 1.07, 1.076. Okay, 1.0760, if candle close below 1.0760, that could be my first aggressive short. Oops. Okay, when I say aggressive, meaning because I did not wait for much confirmation for the market to indicate this could be a reversal. So that's why this is considered aggressive. The moment it break 1.0760, that would be my aggressive short. I put a label over here. A more conservative entry is after the break. Okay, the price will do something like that. Let's say price close at the green box heading lower. I will wait for it to retrace back to around 1.0760 plus minus, and then make another push downwards. Then I will go in for a short. Okay. The second entry is considered more aggressive because more conservative, because I'm waiting for confirmation. Okay, I'm waiting for price to break and then retrace upwards, find resistance and push it down further. So this is a pattern that I'll see maybe it will start to go or start to trend downwards. So it depends on your choice, which one would you prefer. So certain trader will prefer earlier entry, like this case, you enter fast. Certain trader prefer to see some confirmation before you go in for a trade. So it depends on individual preference. Thank you for reminder that my voice sounds like Mickey Mouse over the mic. Someone just comment, how could I sleep during a Mickey Mouse class? maybe Disneyland will start to charge me a royalty for using Mickey Mouse. There's a question regarding this. Anything between 1.076 and 1.0815, no trade. That means the area over here where my green box is, or let me change my color. Okay, where my purple box is the area where if after the market breaks up, comes back down into the area, with this big momentum coming downwards, maybe I will start to suspect there's some reason for a change of trend. So in that big area, I prefer not to trade at all. Wait for something, in my opinion, that is clearer before I take any trades. So it doesn't mean when the price is at any price, I can decide my trade. There are certain times when the price is in an area where I think there's too much uncertainty, I have no clues where the price could be heading, then I would choose not to trade at all. Example, in this case, the area between 1.076 and 1.0815, there will be the no trade for me. Of course, if I zoom it down to H1 or M15, I may find a trade that fulfills my criteria because they are at a lower time frame. But at a higher time frame, H4, it will be no trade for me. Okay, so time flies. We have come to the end of this week's webinar. So if you have find that this week's webinar has been benefit to you, please type in a yes as a word of encouragement for me. So on behalf of Fullerton Markets, I thank you everyone for your support, and I look forward to seeing all of you 2 weeks later on the 10th of April. Okay, so for next week Monday, I'll be traveling to KL, so I'll be flying back on Monday night, so we will miss the webinar, but no worries. Watch out for our weekly research that will be published on Monday, so at least you have some ideas what to watch out for next week. And also I will highlight the trade picks of the week for your consideration as usual. Do not miss that weekly research. So thank you everyone, and see you 2 weeks later. Good night and bye bye.